Hello and welcome to the Weekly Outlook at XM.com. We'll be discussing upcoming data releases that will either decrease or heighten concerns about a possible global recession. I'm Maria Pachurdes, and joining me is lead investment analyst Rafi Boyajian. So Rafi, let's begin with the data coming out of the U.S. We'll get the non-farm payrolls report on Friday, but before that on Wednesday, the FOMC minutes will be published. What should we expect, and how might the U.S. dollar be affected?
Well, Maria, like you said, there's a lot of concern about a recession right now. We're seeing some signs even in the US of a slowing economy. So there's going to be a lot of focus on the non-farm payrolls report for June. Up until now, the US labor market has been fairly resilient to what's been happening with oil prices, with the Ukraine war, and the rate increases by the Fed and other central banks around the world. So we are expecting a bit of a slowdown in job creation for June, nothing too dramatic. So the forecasts are that the US economy added 295,000 jobs for the month of June. That's not too bad, but of course, if you were to get a weaker than expected number than that would certainly raise concerns that the US economy is slowing down faster than initially anticipated. The unemployment rate, that's expected to hold steady at 3.6%. That's, of course, it's a very low post-pandemic low figure. But investors will also be looking at average hourly earnings because they have moderated a little bit, and given the big jump in inflation that we had in recent months, it means that real wage growth in the US is actually negative, so that doesn't bode well for future consumption. So the month-on-month rate is expected to be 0.3%. We could still yet see further acceleration in wage growth in the US, which on the one hand would be good news in terms of US consumers continuing to spend, but on the other hand, it would mean that the Fed would not hesitate to hike rates more aggressively. And talking of the Fed, they're going to publish the minutes of their June FOMC meeting on Wednesday. We already heard from several Fed policymakers already over the past week or two, so we pretty much know where they stand on rate increases, at least for the next 2 to 3 meetings. Despite that, though, despite the hawkish rhetoric that we've been getting, markets are becoming, we've actually seen investors scale back some of their rate hike bets because of those, growing worries about a recession. So if we do see the minutes confirm that we're more likely get a 75 basis rate hike than a 50 basis point rate hike in July, then that could be a market moving. Overall, though, as far as the US dollar is concerned, the dollar could actually benefit either way, because if you get positive data, that's going to push up rate hike bets. If we get some disappointing numbers, then we're going to see renewed fears about a recession that would bolster the dollar in terms of safe haven demand. So really the worst thing that can happen for the dollar right now is if we see an improvement in risk appetite, which would really see the dollar losing some steam.
Moving over to Australia now, the RBA is expected to raise rates again at its July meeting on Tuesday. What is the consensus expectation, and how is the Aussie likely to react?
Well, the consensus is another 50 basis point rate hike by the RBA on Tuesday. Even for the RBA, we've seen the rate hike bets being pared back a little bit. But in fact, there's a possibility that the RBA could go even bigger, could go with an even bigger rate increase next month, I should say. And that's because central banks are trying to front load their rate increases because right now most major economies are in fairly good shape. So they're trying to front load to get as many of the rate hikes out of the way and then be in a position to cut rates later on should we see inflation coming down and even perhaps a recession. If those predictions prove to be correct. So in fact, there is a risk of a hawkish surprise by the RBA. But if they go ahead with just a 50 basis point rate hike, the Aussie we'll probably get a little bit of a boost, but overall it's going to be risk sentiment that's going to be driving the currency.
Turning to Canada, we'll get employment numbers for June on Friday. Is that data likely to change rate hike expectations for the Bank of Canada? And how significant is the report for the loonie?
Well, we know the Canadian economy is one of the strongest one at the moment in terms of in the G7 and probably amongst all major economies because it's got a very tight labor market. It's benefiting from the big rally in energy prices and perhaps it's less directly being impacted by the war in Ukraine than a lot of other economies such as those in Europe. So really the Bank of Canada is in a very good position to go ahead with a 75 basis point rate hike like the Fed did at its last meeting. So even if we were to get some disappointing employment numbers on Friday, I doubt that's going to really change minds at the Bank of Canada. Canadian dollar, unless of course there's a big negative surprise, that could hurt the Canadian dollar a little bit in the short term. But like the Aussie, the loonie is a risk-sensitive currency, so it's not just going to be about the data for the loonie next week, it's also going to be about broader risk appetite.
And finally, in the euro area, the ECB's June meeting minutes on Thursday is the primary focus. Are we likely to get any hawkish surprises from the minutes, given that we've already heard from several ECB policymakers lately, including President Lagarde?
So that is right. We, again, like the Fed, we know quite a bit of, we know what policymakers at the ECB are thinking right now. But of course, the ECB does have a much more complicated governing structure that's made up of central banks of various countries. So it's hard to get a better idea of as compared to the Fed in terms of what the majority is in terms of aggressive rate hikes by the ECB. We know that in July, the ECB wants to raise rates by 25 basis points, but after that, all options are on the table. And so the minutes might give us an idea as to how many governing council members are, inclining towards a 50 basis point or even a more aggressive 75 basis point rate hike. We know that Lagarde is a little bit more on the cautious side. She would probably prefer more gradual rate increases. But of course, the hawkish pivot at the ECB is very clear, is very strong. So we should keep an eye out on the minutes. Now, as far as the euro is concerned, it's kind of in a similar position that the pound is right now, because although we are getting rate increases, or we're about to get rate increases in the ECB, the Bank of England has started to raise rates. The recession fears in Europe and the UK are a lot stronger because their exposure to the energy crisis and the war in Ukraine. So the euro might actually be weighed down by more hawkish minutes, because that would basically get investors, getting anxious about the ECB going too fast and tipping the economy into a recession.
Rafi, thanks so much. And thanks for joining us at xm.com for this weekly Outlook.